The Bank for International Settlements, often referred to as the central bank for central banks, has warned that the global economy is entering a more vulnerable phase. In its latest annual economic report, the BIS says rising public debt, financial vulnerabilities and uncertainty surrounding the AI investment boom are creating new risks. While economic activity has remained resilient so far, the institution says policymakers need coordinated measures to preserve stability. The BIS identifies 4 key pressure points for the global economy. It says inflation risks remain despite progress in recent years, with recurring supply disruptions capable of pushing inflation expectations yet again higher. The report also questions the long-term sustainability of the current AI-led investment cycle, warning that heavy capital spending, supply bottlenecks, and intense competition could lead to overinvestment similar to previous technology booms. At the same time, elevated asset prices, fragile bond markets, and growing reliance on debt financing are increasing risks across global markets. Now, the BIS also highlights record high public debt as a major concern, warning that sovereign debt markets are becoming increasingly dependent on highly leveraged non-bank financial institutions. According to the report, this creates a stronger link between fiscal stress and financial market instability, increasing the risk of sharp swings in government bond markets. The BIS is urging governments and central banks to prioritize price stability, restore fiscal discipline, strengthen oversight beyond the banking sector, and accelerate structural reforms. Now, earlier in the day, we spoke to Suyash Bhatt to listen in to what he had to say.
This is a beginning, or the signs are that these commodity companies like chip companies or memory companies, wire companies, their valuations have become, 10 times, 20 times in last 1 or 2 quarters, and which is why you could see Samsung and many Korean companies as well as companies in Taiwan. Their stock valuations have gone up in last 2 quarters phenomenally high, which probably in last 10 years nobody was looking at the Korean market, but certainly you would find that there is a phenomenal return that many of the investors are getting from that market. So I would say it's a bubble in making. But it's anybody's guess, when would it get burst? So, it's very difficult to predict that. But yes, it's a bubble in making because these are not things which should be valued at 5, 10 times. I can understand NVIDIA getting traded at higher multiples because they have a core technology. But a wire company or a memory chip company trading at 20 times or giving 20 times kind of return is something not usual.